Welcome to the Commercial Real Estate Mentorship Program. The advantages and disadvantages of mobile home parks. Home parks are all around the country, and they're a great opportunity for those that are interested in investing in residential in a unique way. There is an increasing demand for lower-cost housing. Prices are getting to be, again, above where they were in the 2000s, early 2000s, and it may be a situation where some of these houses are outside of the affordability index of a lot of people. So lower cost housing is certainly a viable market for multi-generational buyers, whether it's from veterans all the way down to the millennials. Mobile homes are not as mobile as their name might suggest. In fact, 95% of them are still in their original locations. Now, many times when a mobile home is moved on site, they take the wheels off and it transitions from being guided by the Department of Motor Vehicles to being real property because it's then concreted, cemented into a foundation, and now it's not movable. Seller financing from the mobile home parks may be available. And I don't say this because I'm saying it to encourage you to think that everything has seller financing, but a significant portion, depending on whose numbers you believe, between 30 and 45% of all mobile home parks are owned free and clear. That presents a great opportunity for someone who might want to sell. From my perspective, why would a seller want to do this? Why would a buyer want to do this? Well, here's the predicament that a lot of these sellers have. The majority of their income, unless it's a senior park, will be coming into their manager or them in the form of cash or in the form of money orders made out to nobody or to cash, handed to the property manager or the owner that may or may not make it to the bank for the business account. Well, that presents a real problem because it's great cash flow. The fact that they've got an issue with the IRS, I'm not even going to touch, because anybody's going to say, well, we kind of fudged it with the IRS, but we're telling you the truth. The IRS has teeth. No, I'm not going to go there. So if someone is going to lie to the IRS, I have difficulties with dealing with them. The only way around that would be to structure a deal where they seller finance it or you master lease it, which I'll go to in another extensive discussion about master leases. But you wouldn't buy it. You just take control of it, find out what the cash flow really is, put it in the bank, and then be able to see if you really want to proceed forward. Master lease with the option to buy it at a fixed price in the near future. Seller financing could be available. Master leasing could be available. Financing might be available because these people have equity in the property. Historically, vacancies in mobile home parks are low. Once they're in there, they stay there. That helps get the income coming in steadily. There's also a high cost to move mobile homes from one location to another. When they pack it up and move it, that can be $3,000, $4,000, $5,000, depending how far they're going and what's going on. There's limited needs in a mobile home park for capital improvements. Once the pads are done, the electric's already out there, the water's already out there, the heat's already out there, or they're on propane or whatever they're at. The bottom line is utilities and infrastructure are in place. Once it's done, there's not that much to do. There really isn't. So the limited capital improvements. They're among the lowest affordable housing alternatives for renters because they can actually afford to possibly buy one or just rent one. Because when you buy a mobile home park, many, many times, you're going to inherit some trailers or some homes that the people left or abandoned or sold to the operator because they just couldn't stay there anymore. Land improvements can be depreciated not by the 27.5-year rule you have on most real estate or residential, 39 for commercial. It can be depreciated in 15 years, faster than apartments. And also, you could have some trailers you might be able to write off, or at least the improvements in them, write off faster. Depreciation on the building and on the land improvements. Yes, that's cool. There's few opportunities for things to go wrong with properties because they're simple units. You're just providing power and resource and a place to park their vehicle. Well, not really a vehicle, but to park their home. Selling, financing, mobile home units can be extra profits for the deal. I'm going to interrupt the slide presentation to share something with you that you need to know. I'm sure all of you know who Warren Buffett is, and who his company is. The Oracle of Omaha is the second richest man in America, and maybe in the world, depending whose numbers you're looking at. But he owns a firm called Berkshire Hathaway. That conglomerate has invested in this mobile home market significantly. In 2003, they bought a mobile home manufacturer called Clayton Homes, which is the nation's biggest mobile home builder and the largest home builder, period. It's controlled by Warren Buffett. Here's what happened. He bought it in 2003. He spent billions and billions of dollars to build into the mobile home industry biggest manufacturer and lender. It's horizontally and vertically integrated, which means if it anything to do with a mobile home, he has his hand in their pocket. Today, Clayton operates under 17 different names and is constructing nearly half of all the industry's new homes and selling them through their own retailers. They also finances more mobile home purchases than any other lender by 6 times as many. They also sell property insurance on the houses, and it's just horizontally and vertically integrated. And if that weren't enough, Berkshire Hathaway gets piece of every deal because at every stage along the process, from beginning to the end, Clayton builds their homes with materials such as paint and carpeting through other Berkshire Hathaway subsidiaries. If the world's second richest man likes this marketplace, could you like it? Maybe. So I just want to interrupt and let you know you're in good company if you're owning mobile homes and investing in this community. There's a shorter economic life of mobile homes compared to what we would call stick-built homes. Some communities are built with brick or masonry block, but stick-built houses and so forth, where you basically put a wood frame up and build it up, they have a shorter economic life because they're not as, well, I'm going to say sturdy, but they're not as well built. They're close, but they're not as well built. Mobile homes depreciate more quickly than traditional homes and apartments. The other disadvantage is the prevailing image of trailer park. You've heard of that whole image. And this picture right now is kind of graphic. That's an old, tired motorhome on the left and a little newer on the right, but it's sort of like an RV, mobile home park. The image is a rougher neighborhood than your single-family dwelling you live in. Rents are often paid in cash, or money orders are made out in blank. So how do you know how much this property has really made? You have a leap of faith. So the issue is, you put the deal together, you do careful, thorough investigation, you verify what really is going on, see how many spots are really there and occupied, see what the cash flow might have been if it were renting at scheduled rate, and then factor in therefore not paying, and maybe do something else. Get seller financing or do that maneuver where we do, well, I know you say it's making money. I'm not really sure. Not challenging you, just questioning the issue because you have no proof of that level of income because you put the cash in your pocket. You didn't share it with the IRS either, so that's a little problematic as a property and as an owner. If I'm being asked to take a leap of faith, you need to take a leap of faith first. I will do it with seller financing at a number that's realistic, but I really prefer the master lease where you can verify, is the income as purported accurate? Is that really what it's making? You also have a handle of what's going on with the property in terms of itself. You want to know exactly what's going on with the property, not conjecture. For investors who are willing to learn about this specialized form of commercial real estate, mobile home parks can be rewarding. They can be an opportunity for investment. The trailers depreciate, and many times in a mobile home park, you're going to inherit them, and you're going to have properties you can rent. You pick it up basically as a freebie because it's already on site and they can't go anyplace else. Is it worth it? Well, Warren Buffett put billions and billions of dollars over the last 12 years to build himself into owning the number one manufactured home builder and seller in the United States through its manufacturing and retailing, and provides more mobile home loans than probably the next 3 lenders combined. It's 6 times bigger than its next competitor. If Warren Buffett can believe in this market, maybe there's an opportunity for you. If you got a master lease with the option to purchase, could you verify that the income is real? Could you have a finite amount of time to figure out whether this is something you really want to be involved in? I would suggest you bank all the money, every penny of it. play fair, play square with the IRS, have proof of what it's going to make, and then at that point in time, when you have that in hand, if you need to renegotiate your deal or walk, because if you don't think it's going to work, then walk. You're not obliged to. It's an option to purchase, not a contract to buy. It's a fixed price option. Now, I hope you're smart enough to also negotiate. It's a fixed price option with an adjustment downward for economic reality. Would that be fair? Sure it would. The seller wants out of day-to-day management. You're prepared to get into day-to-day management or have someone do it for you, but you better make sure they're putting every penny in the bank. A friend, yourself, family member, someone you trust with your wallet, if that's what you're doing, to bank every penny of what's going on. That means it's an opportunity. I mean, Warren Buffett also bought Prudential Real Estate. He believes in the real estate market. He's invested billions and billions and billions of dollars in this market. But he invested first and foremost in building the largest single mobile home builder and dealer in the country. And his lender, 21st Century Mortgage, is all part of one parent company, Clayton Homes. If it's good enough for Warren, maybe it's something you ought to look at. Success leaves clues. This is what it's all about, helping you become an informed, intelligent, commercial real estate investor. Take care.